Welcome to this 8-minute webcast that has been produced by PLS to provide large UK businesses with what they need to know about publishing their tax strategy. This webcast is based on HMRC's Spring 2016 guidance. Will you need to publish your tax strategy? HMRC recently issued guidance based on the draft legislation that would require every large UK business to prepare and publish its tax strategy. Any large business should fall within the regime, although if its affairs are handled by HMRC's Large Business Service and it has a customer relationship manager, it will almost certainly do so. A large business will need to self-assess its obligations under these new rules and determine whether or not it falls within the regime. As you would expect, there is a penalty regime to help regulate compliance. The requirement to publish your tax strategy should apply from the first period commencing after the Royal Assent of Finance No. 2 Bill 2016, which is currently expected to take place in July 2016 but could be later. What is a large business? There are financial tests, at least one of which needs to be met by the entity or the group on the last day of the previous financial year. There is a balance sheet test, which looks at assets of more than £2 billion, and there is a turnover test, which looks at turnover of more than £200 million. There will be special rules for dealing with bodies that have a different financial year end to the head of the group. Which large businesses should publish? A UK incorporated company defined in Companies Act 2006, but excluding open-ended investment companies and investment trusts. A group, that is a UK group or UK subgroup, applying the more than 50% ordinary share capital subsidiary test. A multinational enterprise group, also applying the more than 50% ordinary share capital subsidiary test. A partnership, that is a partnership formed under Partnerships Act 1890, Limited Partnerships Act 1907, or Limited Liability Partnerships Act 2000. So to recap, if you are a large business and you are a UK incorporated company, a group, a multinational enterprise group, or a partnership, then it is likely that you will need to publish your tax strategy. What counts as publishing? The tax strategy must be published on the internet as a separate document or as part of a wider document. It can also be published anywhere else that the business feels it is appropriate to publish it. When should you publish? By the end of the first financial year, commencing after Royal Assent of Finance No. 2 Bill 2016, free of charge to the public, and it must continue to be available until the next year's tax strategy is published. Subsequent versions must be published not less than 9 months or more than 15 months after the day on which the previous version of the tax strategy was published. What if there are no changes to your tax strategy? If your tax strategy is unchanged, you just need to confirm that it remains appropriate. What if you fall out of scope? If you fall out of the scope of the legislation, you no longer need to publish your tax strategy on the internet, although of course you may choose to do so. What do you include in your tax strategy? You need to include your approach to risk management and governance arrangements in relation to UK taxation, the level of risk in relation to UK taxation that you are prepared to accept, your attitude towards tax planning so far as it relates to UK taxation, your approach to your dealings with HMRC. So once more, if you are a large business, you need to include within your tax strategy and publish your risk management approach and governance arrangements, your risk level for UK taxation, your attitude towards UK tax planning, and your approach to dealings with HMRC. What about penalties? They may apply if a company, group, subgroup, or partnership fails to publish its tax strategy in accordance with the requirements for a financial year within the time limit. They may also apply if a company, group, subgroup, or partnership fails to ensure that its tax strategy remains accessible on the internet for the prescribed time period. If you fail to comply on time or fail to provide a materially complete tax strategy and/or fail to make your tax strategy accessible free of charge for the prescribed time period, firstly, a 30-day calendar warning notice is issued on or after the first day of failure, but if you are compliant within the warning notice period, no penalty. Then, if you are still not compliant, a maximum £7,500 sterling penalty can be applied up to 6 months after failure. After which, if failure continues for more than 6 months after the time limit, there could be a further penalty up to £7,500 sterling, followed by additional monthly penalties of up to £7,500 sterling if failure continues, although there may be leniency if you have a reasonable excuse. That's great, but what should you do next? You should understand when you will fall within the regime requiring you to publish your tax strategy. If you already have a written tax strategy, you should review it, you may need to update it, and you should have the revised version approved internally. If you have not yet got a written tax strategy, you should start the process of setting it as soon as possible. The tax strategy of your business should be aligned to the overall strategy of your business, and it should be a living part of your business. Your main board should be actively involved in setting, reviewing, approving, and the ongoing monitoring of your tax strategy, even if drafting it is delegated and there are interim approval steps in place. The complete version of HMRC's current guidance can be found at this link. If you would like help with your tax strategy, please contact us. Our website, email and telephone details are on the screen right now. If you would like more information about PLS, you will find it on our website, or you could follow us on Twitter. Thank you for watching this webcast.